All right, guys, let's get started. We're here today to talk about profit taking strategies. I'm Computer Brain, and this is for the Academy. Very quick, this is something that I'll just caveat and say there is no one right way to do this. I think it is deeply personal. You'll hear a lot of different opinions about this topic, and it's very strategy dependent. It really depends on um, what financial instruments you're trading, what time frames you're trading. Are these long targets? Are they big percentages, or are they small percentages? Are they basis points, or are they tens of percentages? Um, so don't let anyone convince you that there's only one right way to do this. I think it takes a little bit of nuance, and I think it depends on a lot of the different situations and setups that you get. So without further ado, um, how do we take profit? Again, I said it was deeply personal. There's no right way to take profit. There's different ways to do it based off of the strategy and the opportunity. So, in my opinion, there's really three ways to do it, and then you can mix and match these three different ways. And I'll say the first way is taking 100% profit at a predefined level. That's kind of like one trade, one TP. Um, you can take profit at multiple predefined levels, clip on the way up. Um, that's another way to do it. And you can take profit upon the invalidation of the trade, meaning you set some type of level, moving average, candle close, trailing stop, whatever, and you close when that's met. So you don't have any target in mind when you enter, but once the trade begins to go wrong, you get out. And then finally, I think what most sophisticated traders do is some type of combination of these based off of the situation. So let's just go through all of these examples, and then I'll get into some of the trades that I've taken recently where I've used all of these three different strategies and kind of my own custom way of doing things. So this is kind of the classic, like I would say, shorter term trading tactic. You'll see this more for intraday trading, scalping, um, things like that, where you are just trying to move in and out very tightly, and it doesn't really make sense to do multiple take profits. So why is this good? You can maximize your profits at the highest point that you intended to versus clipping on the way up where you're getting kind of a blended profit level. And what are the cons of this? If you're getting out all of your position at one place, there is the risk that it could just keep going higher without you. And that's more relevant, I guess, if you're like high time frame swing trading, getting in at the beginning of the trend. If you're saying, hey, I'm going to cut I got in at the beginning of the trend and now I'm going to cut all of this at the first level of resistance. There's a chance that it could break resistance and leave you behind and not let you get a retest to get back in. So, better for range bound price action if you're just going from level to level or bottom to top, top to bottom of a range, or just simply just shorter term percentage trades if you're doing like intraday scalping, trading around ATR, things like that. You're definitely just getting in and out, and you are not really caring about clipping multiple things in a row. Like if you're trading FX, you hear old school FX traders, like the idea of taking multiple different profit levels when you're just trading fractions of percentages, it doesn't really make sense. Okay, the next way is to take profit at multiple predefined targets. So this is the example here. You'd look at the chart on the left and you would say, all right, where are the levels of resistance and support? And you could draw some lines and say, all right, I'm going to take some out at these prior levels that gave the chart some problems and where the chart paused last time. And you can split it into this is just a random example on Bitcoin. This is not a trade I actually took, but I'm just saying this could have been logical for this higher time frame. This is multi-weeks, I guess even multi-months, this trade. And you could have been shaving some out as you were getting higher and higher and higher on this. There's different ways that you can structure the actual take profits, like what percentage. Like some people want to take less of a percentage off at the beginning and more percentage off at, like later on. Like, maybe the first one is 15%, and then the rest is, call it 42 and a half each. That could be one way to do it, or you could stagger it and be like, all right, it's going to be 20%, it's going to be 30%, and then it's going to be 50%, or you could just say, hey, it's going to be 33%, a third each, a third. There's really no right or wrong way to do it. I think that this is how it can get so personal, depending on your risk tolerance, what other trades you have at the same time. Are all the other trades the same? Are these all just like high time frame swings, or do you have some like scalps going on or short term stuff? That could impact how much you take off, right? Because you may want some diversity. If you have one trade where you're doing the exact same thing, you may want to like mix it up a little bit. If you're taking less off on another trade at the first trouble area, maybe you want to take a little bit more off on this trade, just so you have a little bit of diversity if things just kind of hit that only one target and then pull back. So the reason this is so good is you can ensure you take at least some profit off the table, even if it reverts. Like, a lot of times, I'm sure many traders can sympathize with this. It'll hit the first, take profit region, the first trouble area, and it'll just revert, and then it'll go through your entry, and then it'll stop you out, or it'll invalidate your trade and you close at a loss. And you're like, wow, I didn't take any profit. I should have taken at least a little bit of profit. So this at least mitigates the fact that, it helps you take profit at least and secure a little bit of a win. And obviously, the more you take off in profit, the less, if it comes back against you, you will have to, to go against you in a loss, because your position size will be smaller at that point. I think this is also a great way to like automate your trading. Like if you're really busy all the time, you have a really hard job, and you don't have time to like stare at the charts all day and like be very active, like this kind of idea that you can just like enter a trade, set your stop wide, and predetermine your sells at different limit prices is pretty great, right? Because you can literally be selling and not even be at the screen or even know that it's going on, and you're enriching yourself by doing that. The cons of this, if you're just going to say you're going to take all of it off at certain points, is that, again, you if it goes higher than your last TP, you miss out on that upside, right? And this example is very cherry picked, right? I'm picking like the top of the last peak, and I'm saying sell all of it there, and this could break higher, and I hope it does. And then obviously this trader would miss out on that. This is better for high time frame trades, and also like price discovery, which I'll show an example of that later. Meaning, clipping out at certain levels is great if the asset is at all-time highs. So we'll go into more of that later. All right, the third way to take profit is to take profit upon invalidation of the trade, meaning it's no longer correct. The reasons that you got in are no longer valid, and it's lost some type of level, it's lost a moving average, it's had some type of candle close, there's some kind of trailing stops. So let's just do, this is kind of an example. So the pros of this are that there's no limits on your profit. Like if you are early in a trend and this goes a massive amount, you are not capped on your upside. You didn't sell at the first level of resistance. You didn't sell at the second level of resistance. You let this keep going and going and going and going. That's I would say the biggest pro. The con of this obviously is because you're not taking profit on the way up. If there was some really nasty pullback in the middle of the night when you're not at the screen, you would miss out on those unrealized gains that you had. So that's most concerning at the beginning of the trend, honestly. So if you're like, I'm up, 5%, and then it does like a 4% pullback, you're like, I just gave up, 4/5 of that trade. Darn, I didn't take any profit. So that's the cons. And I would say this is best for the beginning of the trend. If you're like, I know I'm early, like this trend is just going from bearish to bullish or bullish to bearish, that's great. I would say this is best when it's not like a super range bound asset. Like it's either a newer chart or like the range is really, really far away, like the high time frame range that could block it. That's what this is best for. Like super high time frame trends, larger percentage trades, you want to swing farther. And also, I think this is great for price discovery too. This is just another way to do, coins that are at all-time highs. So I'll actually just dig into this example here. This is a trade I actually took. And basically, this was a moving average cloud. And I said, all right, when this flips this and retests this key level, I will hold this trade until it breaks this, until it breaks. Obviously, it went higher, so there are pros and cons here. I really should have actually just gotten back in this trade again after cutting there, and when it reclaimed the cloud, kept going. But, you live and you learn. You get better every day. So, yeah, I mean, it's really that simple. It's simply just saying, all right, we've reclaimed the trend. All right, cut when the trend is gone. And there's some nuance to this. The way that I personally like to take these bigger high time frame trends, which is not the only way that I trade, but it is, I would say, the smaller portion of it, because I think these setups are actually more rare to get. Not every asset has these huge trending moves. It's more, crypto is range bound 85% of the time, and 15% of the time it trends. So this is only good when it's in a trending market. So you have to really keep that in mind. But I like to use two different moving averages. I'll pick two. I'll say, all right, there's a local one. For this one, I think it was actually 15 minutes. And then this was the 1 hour, which I viewed as the higher time frame, at least for this run. And this was a banger move. This was like a 50% move with a perp like leverage trade. And I think I cut, this would have been the loss of the 15-minute here. So I think on this wick down here, I cut half the trade. And then up here, I cut the other half of the trade. So that was a great, it was blended probably somewhere right in here. But yeah, this was actually one of the best trades I took this year. So had to put it in. And we'll have some more trade examples that were also good and valid. But yeah, so if I'm trading swing, if I'm at the beginning of a trend where I'm like, all right, this downtrended for months, and now we're potentially, we tried to go lower, couldn't, flip this key level, reclaim this, call it a midterm trend. I said, all right, I'm in, and I want to be in until this trend breaks. That's a great use of this. This is not as useful towards the top where you're like, this might keep, the trend, has been going for months, but now it's like, I think it might be time for it to cool off. So be careful when you're thinking that it's going to keep trending, but you've already kind of missed most of the trend. All right, let's go back just to examples. Let's talk about one TP and when to use it. So I didn't actually draw the top of this level, but this is a real trade I took on Bonk. This is about a 4-hour trade. And I saw these wicks here as kind of range high. This was a very clear range low. You had multiple candle tests on the from above and from below, support, resistance. And when it finally reclaimed this plus this moving average that I selected, I longed it and I said, I'm not going to take any profit on the way up. I'm going to just sell at the range highs. And that was a great, very fast 4-hour realize. I think this took about a day to happen, maybe even less than a day. So boom, that's very capital efficient. And then actually, I think this was somewhat of a local high. So I don't think it is Bonk is this high anymore. Another example I took earlier in May was Sui. Again, I picked a local trend. I think this one was, actually this is not, I have the 1 hour shown, but I think the 15 was what I was using here. But I basically said, very clear range, bounce, 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 underside retest, rejection, bounce, bounce, rejection, acceptance, rejection, low, higher low, reacceptance above the range, go time. And I was targeting actually the yearly open, which is just above, I guess, this old range. But I figured that given this price compression, it deserved kind of higher than just range highs. So it's discretionary. I mean, look, I didn't time the top. I could have gotten 20 more cents out of this, which would have been huge. But I was targeting just below these this yearly open, and I'm happy with it. This is also like a 4-hour trade, which I will take all day. Okay. I will cherry pick the best multiple TP trade I've ever taken. This was in November 2024 on Bonk. And this is super zoomed out. That's why it looks so funny, but this is actually like, kind of a bigger stop loss than it looks like. But I was watching this price compression at this level. I was watching the reclaim of this 200 daily moving average, and then this more local moving average. And I had just drawn these kind of like these lines here were weekly levels that I found to be key. And I took, I actually don't really remember even how much it was. It might have been like 15 or 20% off there, 15 or 20% off at this next one, which was clearly resistance. And then when it kind of lost my trend, which I think was the 1 hour cloud, and then it lost this level, I probably cut around here when I was like, all right, the trend is lost, and the level, I found this level to be very key. That was when I sold, all of it, and was fully out of the position. So, I probably should have cut it even more up here when it was very clear that it was losing this trend. But I didn't, and I waited more down here and cost myself a little bit. But sometimes, traders will want to see that the actual level is lost as well, not just the cloud, because obviously these moving averages are, aren't like on the chart per se. These are things that we put that the other traders don't see necessarily. And because it's not something that everyone sees, it doesn't always react to price. It's just like an invisible indicator that can, guide when we take profit when we enter a trade. Next one I'll talk about is the multiple take profits in price discovery. This is a great way to use multiple take profits. Another way to if you're price discovery, meaning when the asset's in all-time highs, you can use a Fibonacci retracement, which is a simple tool in TradingView, and you pick a local high and a local low. This is very zoomed out, right? But this is very key. I think this is the all-time highs around 109 or 110, the prior ones, and then I picked this 75K low here. And it gives you kind of a nice view of what we have in store ahead of us, when and if we get there. And I think we will get there eventually. Hopefully it's soon, but we'll see. But if you're like, hey, I have no idea where I should be like taking profit, like there's nothing on the chart, you can just look at these fibs. A lot of other traders will be looking at these fibs too. So you might want to undercut these levels a little bit. If you're like, it's gonna be 130, maybe you sell like 128, 165, maybe you just undercut it by a little bit. But yeah, look, you can sell by taking chunks out here, or maybe you think it goes even higher. You can sell further up on these fibs. Another option for the multiple TPs in price discovery, or sorry, if you're in price discovery, is again the moving average clouds and cutting upon invalidation of those clouds. That's actually probably what I would do. I probably wouldn't take any profit, and I would pick two different moving averages. I'd pick a low time frame and a high time frame one, and I'd cut half upon loss of the local one, and I would cut another half upon loss of the high time frame one. And I think that's more akin to what I would say, professional traders would do, versus just clipping out at these levels, but to each their own. All right, and then I will talk about the trenches. You can also do the same exact thing with these fibs for trench coins, and I think this is super useful too. I have found that I think when you're trading these micro caps that are 100,000, million, whatever, they're really small. I've found that moving averages aren't really that useful, but fibs are. So if you're like, hey, I really like this coin, I found the best way, at least for me, my personality, is just to kind of like dollar cost average in when it looks like it's somewhat bottomed or oversold. And then I'll just simply pull up the fibs. I'll find the local high and the local low, and I'll just take some profit out at all of these fibs. And it gives you kind of a lot of different places to sell. It somewhat makes it a little bit more hands-off, which is nice, and you don't have to put so much thought into it. And you just take a little bit on the way up as you're going back up again. If it does, a lot of these coins die. I don't know. This is one that I think we've talked a lot about in our trenches channel of our Discord, which I thought was interesting. But yeah, that's how you can use that. And yeah, I'll open it up to questions if there are any.
We're good, man. I think it's helpful. The fib thing I've never tried before, even with the trench coin, so that's helpful.
Oh yeah, it's super useful. I would say I know you were a little late in joining, but like yeah, the fibs is awesome for the trenches. I think it takes some of the thinking out of it, which is nice. And you can see obviously like even on this just like one random example, like you can see that people were looking at these fibs when they were selling here. Probably selling here as well. Like there's a lot of confluence you'll see on small caps, big, medium caps, large caps. Like it's really cool. Um, I would say I really only use the fibs on me personally. I only really use them on these trench coins. I would say when I'm trading Bitcoin or something like that, I'm going to use some type of moving average or my moving average cloud, which
Is it just because they have more data to pull from over time, I guess, where the moving averages make sense more, I guess, or on a larger
it's really
asset
just
like
personal.
Bitcoin?
I would rather if I think sometimes you can get a better price, like you're selling at a higher price when you are cutting. This is how I do it. I'll pick two moving averages, like a short one, call it an hour, and then I'll pick a long one, like 4 hours or 12 hours, and I'll say, hey, if I lose the short one, I'll cut half of it, and if I lose the long high time frame one, I'll cut the other half. And generally speaking, I found that you usually will get a higher price than taking 15% out, 15% out, whatever, and then you kind of end up doing the same thing, right? Because the way a lot of these traders will do it is they'll take out, take out, take out, and they pay themselves on the way up, and then they'll have moving averages, and then they still end up cutting. So you're basically doing the same thing that I would, but I'm not like selling at these lower bits. I'm just waiting for it to be higher, and I'm just gonna cut when I lose like a more local trend. But some people, like one of the traders that I admire, I think he only uses high time frame, and so it makes sense. It makes a little bit more sense for him to cut on these take profits because when you lose a high time frame trend like a daily moving average, you've probably come down in price a lot already. So it like might look like you come up here, you hit this, and then you come down and you lose the local or the high time frame moving average. And he's like, I should have cut a little bit up here, but I already did because I was cutting on a local trend and then a high time frame trend.
Okay, yeah. Oh, I see what you mean because you're using the local trend as kind of your first warning signal.
Exactly. That's
Right.
exactly
Yeah.
right. And I gotta say, price discovery is an absolute blessing. Like, whenever an asset is at an all time high, like the most number of traders will pile into it. It's a great trade to make money. That's why you'll always see, no matter the context, like if Bitcoin is at an all time high, like everything will just pump because statistically it means that prices are about to go higher. So you can't get more bullish than all time highs.
Oh, that's what I was thinking. And right now it feels, at least for me, being sort of newer to taking this more seriously, seems like it's a fairly difficult spot to trade things because it don't really know whether we're going to go into not like extended downside, but more short term, a few days of sideways and down, as opposed to like a clear up or down
Yeah, I
trend. At
mean,
least
look,
that's how I'm.
it's at resistance. I mean, right now we are at high time frame resistance. Here, I'll just pull up my. I will pull up my. Let me share. I have to share a new screen. 1 second.
So then that would mean that some of these, even these higher cap plays like hype or fart coin or whatever, might actually have a harder time resuming kind of extreme upside unless Bitcoin makes a decision, right?
Yeah, absolutely. I think everything is kind of in a wait and see approach, and what you can see. This is why I love looking at spaghetti charts. You can kind of see what people
Interesting.
are going to think is going to be the fastest runners. This is very zoomed in, but like, let's find a local low here. I like to kind of see.
So
Actually,
these are all different coins, huh?
yeah.
That's what you're. Okay.
So I just picked kind of a local low. This was kind of, I think, a sell off this morning, and you can see what people are bidding the most of off of that dip. So everything dipped, the whole market dipped, and now
Oh,
this is the recovery. Launch coin, fart coin, hype, radium, goat, Melania, Popcat, Pepe, blah 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 blah. So these are the things at the top that you want to be trading long, right?
oh yeah, yeah, for sure.
So that's why I love
That's
I
yeah.
love
So that's a nice indicator that kind of gives you heads up about where the liquidity is going,
Absolutely.
or where people are putting their bets, I guess.
Absolutely. That's absolutely right. This is why I love using this. It's like okay, we just had a big sell off. All right, the dip is over. Where are people putting their money? I mean, there could be another dip, right? But
Oh yeah, yeah, for sure. But that's where they're
this is a
putting their
great way to
money and
see
their
it.
confidence right
Yeah.
there, because they know that, when Bitcoin resumes its uptrend, that stuff's gonna pop first.
Yeah, absolutely. I have a video on this. I'll send it to you, um, and it
That's an
explains more how to make
interesting.
it and how to use it because I use it actually on multiple different time frames. I found it very helpful to look at it like, 3 days over a 1 day period and then kind of like more zoomed in, and
Yeah, it's pretty
you can
cool.
kind of see the
Never
trend
seen
of
anything.
everything.
And Bitcoin is the one in the middle, the sort of
Yep,
the yellow.
the thicker
Ah,
line in the middle of everything is Bitcoin, and like what I see here, at least on this 3 day chart, is like it's definitely like a tale of two cities. Like you have these like huge outperformers up here, and then you have these kind of crappier coins where no liquidity is going to, and they are just kind of chopping around. So this is a very wide spread, I would say. So I'm not like, and then on a 1 day, most things are down after the sell off yesterday.
and it's not on one day. It looks like everything's down,
And then this
except for.
is this is the New York session, and yeah, I mean, look, I would say most things are candidly down. Bitcoin is up, which is great, and you've got some outperformers: Launchcoin, Hype, Aave, Sui. But yeah, I wouldn't
Yeah,
say
that's
that
pretty
this is like
surprising.
turbo
Okay,
bullish
yeah.
for me. Turbo bullish is when everything kind of on all of these three time frames is just like pointing up and to the right, like everything is catching a bid. This is more like I can tell people are positioning. If Bitcoin breaks out, this is gonna rip. Launchcoin, Hype,
Hype and
yeah,
Hype are gonna go
yeah. I mean,
crazy.
Hype
Yeah.
looks great. Hype looks great. I don't know if you were in the trade, but I was talking about kind of take profit strategies on Hype, and I mean, this thing is
I
absolutely
didn't
what you
get
want
into
to.
Hype yet. I was just kind of watching it. I just signed up for the Axiom thing, and once I saw how the platform's actually pretty nice. 'Cause I was trading on Hustle before, and like Maverick was saying yesterday, it tends to lag so much. But with Axiom, I get to see the levels I enter, the levels I exit. It seems like it's easier to.
Yeah,
Now I'll start. You know what I
for the
mean?
trenches
Because
stuff. Yeah, I think that
without seeing a chart, it's just flying way too blind. You know?
totally, and I think you there's proper like perp trading platforms too if you want. If you're trading Bitcoin or Hype or anything like that.
Oh, see, I was only playing with the perps, just with like I'm at like $20 amounts and whatever, just to see what it was like, and only on 2x. And taking, cutting my losses quick or taking a small profit quick. Just because for me, it was more about just seeing, okay, can I actually with hustle, in my own reading of the charts, get into something and get out and not lose money or keep my losses at a minimum. Just more of a discipline thing, I think.
Yeah, absolutely. Well, good for you, man. And
You,
and
you think you suggest that's a decent idea? 'Cause I'm like, there's no way I'm throwing thousands of dollars into something if I'm not sure I can make consistent wins, you know?
totally. I mean, it
Especially not
it
with
takes so
massive
much
leverage. I
studying.
just don't
Yeah.
play with.
Where would you say you are in your like your studying your kind of journey like with all of this?
With all this, I've actually been in crypto. Like I got into it around 2014 or so. I didn't buy anything till 2017, and then I learned how to kind of read charts back in 2018, but didn't really trade a whole lot because I was watching that guy, the chart guys, Dan from the chart guys. He was pretty good at lower highs and higher lows and all that, but.
Mm-hmm.
It's really now that I've started to think, okay, I'm kind of missing out on opportunities with actually learning to trade the right way. Now that we have Agent Hustle that can, it gives you a good leg up, but there's still a lot of risk management and that goes into it and the psychology of it that to learn. You know what I mean?
Totally. It's it's definitely like a long journey that's never ending. Like I'm always hesitant to even be like I'm a good trader because you can never even like think like that. The market is always humbling you. The market is always fooling very 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 smart people. Um, I think it's like it's just it's a game that you can never really win. But I will say like consistent practice and study, and I think you've clearly found a good group. Like there's a bunch of really good traders in here that have
Yeah, it
done
seems like you
really
guys
well.
really you know what you're talking about a lot, and it's not just somebody. You guys aren't just like tossing out pump and dump hype stuff like like so many of it, so many people in crypto. You know how that is. I
Yeah.
mean,
No, we don't do any of that. Like I would say that Max and I, we really just trade perps, and I do this for a living, and so does Max, and we're just trying to this group is new. We're just trying to like get it up and running, but like it's the theme is educational. Like we're not like shilling meme coins and stuff like that. We're trying,
which I think is
yeah,
nice because it almost gives you a safe environment to kind of learn how to learn it more, and rather than just like just toss $10 at something and hope it moons or whatever.
which is like it's been proven that it's like you have better chances of going to the casino and winning than you do doing that kind of thing. Like it's like something like 0.1% of like wallets in the trenches like actually consistently make like more than $10,000. It's something crazy like that.
I just saw that and it was like, man, yeah, you're right. You have a better chance going to a liquor store in one of those little slot machines
A hundred
in the
percent.
back.
Or like just randomly throwing shit at sports gambling, which is obviously like the house also always wins on that. Um,
There's a lot of that. I guess Hustle was talking about, I don't know, one of them on Twitter was talking about that, how they're going to talk sports betting and Hustle. The next thing.
Yeah, I mean, look, I personally I have found the best risk-adjusted returns trading perps. I think
Yeah,
it's
it seems like it could be. Definitely. If your
yeah,
risk management is good, yeah, it
it's all
could
about
be
risk
for sure.
management. It's all about making your winners larger than your losers, and if it's a loser, cutting very very quickly. And if you do that over time, like you can be profitable. I think the difference between being profitable and not profitable is simply just being able to cut very quickly if you're wrong, and that takes a lot of like pain management and like discipline. But like once you kind of figure that out, you'll be like, oh, I get it. Like I understand how people make money doing this. Um,
And yeah, it makes sense because is it sort of, would you say it's sort of like, I guess like poker or whatever, where, there's skill involved, obviously, but there's also a lot of probabilities where if you're skilled, what I mean? We're in the sense where, you're going to lose certain amount of hands, but if you have your risk management Loctite and your skill level, then you should consistently win money over time or not give back so much.
Totally. Totally. I think the best traders can go on like pretty bad losing streaks and then still manage to make money. If that makes sense. It's like you can just learn
Yeah,
how
no,
to
I
like trade
guess.
shitty environments and like you can have a bunch of losses, but the losses are really 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 small. And then when you get those like chance few good big setups, you're able to size into it because you have a high probability, high expectancy setup and you can make all the money back and more. And that's that to me that is honestly trading. Like your win rate is not over 50%. The best traders I've ever met are like 40% win rate kind of people. My
That's
I'm
interesting.
I'm
Yeah,
I'm
'cause-
I'm I'm profitable and my win rate is like between 30 and 40%. Um,
and that's good to have that type of honesty too, because sometimes you look at these P&L reports like they were talking about the other day, and it seems like these guys posting are like every time you turn around, they're posting another 2,000%
oh yeah,
gain on a 25x leverage, something or whatever. You know what I mean? Sort of gives this false impression that
totally.
everybody's winning all the time.
Yeah, I mean these I think a lot of times these people are either they're posting one out of every 100 trades and so one out of 100 is a banger. Or it's fake. So like what I found to be candidly the most profitable trading, and everyone's opinion is different and everyone trades differently, but I found like more of the short time frame trading stuff, not like scalping, but like kind of just like playing rotational ranges. That's like more my strategy. Is very profitable, but it's not like a sexy P&L screenshot. It's like taking like
Now,
Solana from like
what type of
160 to
time frames?
170.
Okay, so you're talking maybe more like an hourly time frame or
Yeah,
4 hour to
I'll
4 hour
show
type
you.
of thing.
I'll just go back to the
That's actually
presentation.
pretty cool because that's one thing I did learn from watching the chart guys was the importance of time frame,
Oh, absolutely.
and that at least helped me because you get the bird's eye view of,
Yeah.
or you can go down like a microscope and look at things at a you know.
These are actually trades that I took. This was a trade I took. This is a great trade. I mean, this is I would say this is like these are the best type of trades. These are like I would say if you get these setups, these will make your month. Um, this is, I'm looking at ranges. I think bonk. I follow a couple different coins. I probably look at like six very very closely, and I look at them every single day, and I'll trade them long or short, uh, nonstop, basically.
Sure. But you're very well acquainted with their price action over
Totally,
time because
exactly.
you mentioned.
And I found that to be a really helpful way to get good at trading, or at least to up level in trading, is to just focus on one, two, three, four, five, whatever, a small manageable amount that you can look at every day and understand the way it moves. And like this is just a kind of a classic trade for me. This was just a key level that I had seen, and you can see how price is bouncing, top to bottom and then bottom to top. It's support and now it's resistance. And then as
Oh
soon as it
yeah, yeah.
flipped it, and then I use these moving average clouds, which is just, it's another type of moving average. And I picked this one here, and I said as soon as it flips both of these, I'm going to go long, and I'm just going to target these range highs here, which are just these spikes, and I pretty much top ticked it here. Um, and this
That's
was
perfect.
it was nothing sexy. This is not something where you show the P&L card and people are like, oh my god, 2,000, 7,000. That shit. In my opinion, I can't imagine those people are like profitable traders.
Well, because
Um,
I mean, they're using 25x leverage or something, which means they could get blown out in a second.
Well, this was pretty high leverage. I think all leverage has to do with is position sizing. Um, I'm always risking between 0.25 and 1%, or maybe even 1.5% of my portfolio on each of these trades. So I'm very
Okay, so
strict about.
you're risking you're doing so that's really good risk management.
Yeah, exactly.
In terms
But
of
you said 25x. I think this leverage here was probably 30x. But
Oh, okay. So
I'm only risking, I think on this trade I was only risking 1% of my portfolio.
okay. So if you have a big enough portfolio, where you can have a large position size, then you can use larger leverage like that because even if you do lose on that trade, it's not going to negatively affect your full account size very much.
Exactly. I'm only risking 1% of my account. And I would encourage everyone to always, 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 when you're making a trade, to think about it in terms of how many dollars do you have to trade and what percentage of your account will you lose if this trade loses. And if this trade loses, it really, really, when you're just learning, it should never be more than 1% of your whole account. Even if it's a small account, you're going to blow the account if you don't kind of start small and learn how to stack up those wins. Because this was 1% that I
Interesting.
turned into 4%. So I got 4% growth on my account from this trade, which is great. And if you stack up a couple of those, like you're golden. Um,
That's a good way of looking at it, though.
absolutely.
Very different than
I
what you normally when people talk about just trying to catch the next 100x with everything that they have or whatever.
Yeah, you probably had some pretty substandard teachers. I'm sorry, but hopefully
Oh,
I'll send you some
oh,
videos.
I've learned my lesson over the years. That's for sure.
Yeah, I think the most important thing is position sizing. It's like if you don't know how much you're risking on the trade, like you've already lost. 100% you've already lost. Um, what else? This is another kind of same exact type of trade. Just a level flip with a moving average flip. Um, I liked this one on Sui because it had a higher low here. It swept really hard here. Wanted to come
Oh
up,
yeah.
failed one more time. Gave me this perfect, perfect, perfect stop loss here. And then as soon as it came back above this level, I just took it and it ran really hard. And look, I got out. This is a 100% TP here. I got out a little early, but I'm still. This is another 3 to 4 hour trade.
But
So
it was still a
actually, this might have
huge.
been a 5 hour trade on this one. So this is a great trade.
Wow.
And again,
That's
not risking
awesome.
a lot. I think I risked 1% on this and I made 5%. So I grew my portfolio by 5% by hitting this trade.
So you just look for very strategic entries when everything lines up.
Exactly. And look, I want to know like very quickly. Like if I'm wrong, I'm just immediately out. Like if this came up here and just started fucking around on here, I would cut it. I wouldn't wait to get stopped out. Like I know that if I'm right, I'm going to be in profit very quickly. And if I'm not, I cut. That's why my win rate is lower. But
That
I'm
makes no
profitable.
sense. But you're ruthlessly cutting. I mean, if you're down or thinking you're going to be things are shifting not in the favor of what your where your trade thesis was, and you just cut it and get out because those losses can mount up quick.
They can, but not if you have good risk management. If you're like, all right, I'm going to risk 10% of my portfolio. Yeah, you do that a couple times, you're
Oh
done.
yeah, yeah,
You're
for
done.
sure.
You're done. But if you have good risk management, here's some secret sauce. I will usually enter 0.5% at first, and then I'll add as it's going in my direction. So if I get in and then it shits, I'm only losing like 0.25%, maybe 0.3%.
Oh, okay. So you're even scaling your entries sometimes.
Always, I'm always scaling my entries. My first buy is always going to be half the position or like a third of the position. And but
Interesting.
I'm trying to get in close to the price, right?
Hmm.
But I'm waiting for more like upwards movement. Um, and that way, if I have to cut it early, um, I'm losing on a fraction on half the position size.
Wow, no, it's a different and interesting perspective.
Yeah. Let's see what else. I would say this is the way I used to trade. This is a trade I took back from November. This is one of those like P&L snapshots, right? Where you're like, oh, come join my group. I hit 10,000% moves. Like this was simply just being in the right place at the right time with kind of a moon boy mentality, saying like I'm just gonna see how high this thing goes, and just taking some off at key levels. So this stop loss is actually wider than it looks. It's just so zoomed out because bonk went on a crazy run in November. And I literally was just looking at weekly levels, and I was saying, all right, I'll take off some here, I'll take off some here, and then once I lose this trend, I'm just going to cut the whole thing. Um, but again, to your question about the take profit on the way up versus cutting the whole thing at the loss, I would have made way more money if I didn't scale out of this first one here, and I just cut when it lost it up here, right? And not
Oh,
taking
okay,
profit on
yes.
the way up. But you have to be attentive and kind of like ready for that. You can't be like AFK for a week and then you come back and you're down here. You're like, oh
Oh
shit.
yeah, yeah. Of course
Um,
not. Yeah.
so it just depends, right? Like I said it earlier. Like if you have a very demanding job, you have a lot of other responsibilities. You can't you have to take days away from the charts. Then yeah, it might make sense for you just to set predetermined take profit levels and then obviously always set a stop loss, but to take profit on the way up and move your stop loss up, and then if you're away on vacation or whatever, the trade doesn't screw you over because you were gone. But I'm
Oh
terminally
yeah.
online, and I can I checking, probably only not checking this shit for like 6 hours when I'm sleeping. um
Oh yeah. Yeah. So you can kind of babysit trades if you have to.
Totally. And especially when I'm entering, like when you're at the beginning, you're obviously at the highest risk of it failing. So if I'm entering something, like I'm there until I know it's not going to be a failure. Um, yeah, those are. I mean, look, I'll publish this video and these examples, and I'll send you some other videos that I think would be helpful for you. And let me
Oh,
know what you think. There's one on risk management that I think is essential. There's one on spaghetti charts. Um, those are.
oh yeah, no, I'm interested in it because, like I said, like now I have some time on my hands, and with hustle, and then now with you guys here, there's no real excuse for me not to level up my skills here.
Uh,
But like I said, I'm kind of dipping in with not a whole lot, just because. I mean, I have other positions in crypto I've had for years that are fine, but like just to trade, something to put into a trading account. I'm just kind of keeping it simple and trying to learn.
No, it makes sense, and I think my biggest another piece of alpha that I think it took me a while to learn is when you're first learning, you're obviously going to be the worst version. You're going to be the worst trader you'll ever be, right? You're only going to get better. So like, just remember risk management when you're starting out. Like, do not use too much size. Like and I wish I did this at first, but when I was really trying to try new tactics and new ideas and new strategies and testing shit, I would use like $100. I would just use like money where I was like, all right, this is not 1% of
Yeah,
my
yeah,
account, but if I lose it, I'll feel something. $100 is still like a meal, a nice meal, but
yeah, yeah.
it's not gonna f my P&L up, and I would just trade with just $100, and I would be like, all right, does this work? Does this not work? And it made it real enough to where I felt a little bit of pressure, and which I think you need a little bit of pressure
Yeah,
to
yeah.
actually learn anything. I don't think you get better by just. I'll use a tennis analogy. You don't get better by hitting the ball machine. You get better by playing matches. I think the same is
Yeah,
true.
no, true.
The same exact thing is true with trading. You don't get better by doing the fake money.
Paper trading.
Yeah, paper
Yeah.
trading. You have to use a little of your hard-earned money because it is hard-earned money, and you've got to hold on to it. And if you get that mentality of like, no one's taking my fucking money, you'll be a good trader. Like, just don't let people take your money. It's all about growing it slowly but surely. And I think the whole idea that like people log on to here and they're like, I'm just gonna hit a 1000x and I'm gonna quadruple my account and that's that. Like, I just don't think that's real trading. And if it does happen, they're gonna blow it and it's not repeatable. I've met
Oh yeah,
I've met,
for sure.
and this is I've been doing this for a while now, but I've met multiple people that have made crazy amounts of money, millions and millions of dollars, life changing money, but they're not millionaires, and it's really sad. And it's because they got lucky and they couldn't repeat it, and there was no actual like repeatable alpha there.
I guess that's why you also have to practice and find an angle that works for you. You know what I mean? Like some sort of that you can repeat, like a process or a system, whether it's, including risk management. But in terms of you, like with invalidating trade theses, you know
Yeah,
what I mean?
yeah,
Because if not, you are just kind of, it's like the spray and pray method. I'll put $10 on all these coins and keep my fingers crossed and hope they 100x.
yeah. I think it's a
There's no
bad
strategy.
that's a bad way to do it. You know Maverick, and I've Maverick's a friend, and we've talked about it, and he's like, yeah, you'd think that you could just like go into Pump Fund and like put like point one soul into like all these new launches and you'd like you'd make money, but like he's like, no, you'll 100% lose all the money. um, I think at least now this crypto environment is so dispersed that there's
Oh,
no
for
spray
sure.
and pray that's going to work anymore. um, sure, you can get
You have to be
lucky, and,
fair.
and maybe you put it in the next whiff, and but again, that's the example of the people that make these millions and then they blow it, because that
Oh,
wasn't like a real repeatable strategy. Because like there's, I don't know how many coins have been made at this point, but like hitting the next whiff with on pump fund is probably like, you probably have a better chance of like getting struck by lightning or like eaten by a
yeah,
shark, like something insane. um, yeah, on that happy
that's
note.
true. Yeah, because most of them don't. Most of them dump immediately on graduation, or
Yeah, on the
don't even
bonding.
graduate, or get to 99% and then dump.
It's crazy. I actually got into, I would say, I'm kind of like you. I bought my first Bitcoin in 2017, and have been doing this for a while. And I think what got me really, really into it again was the trenches stuff. But then I kind of quickly realized that like the odds are so stacked against you that like I was like, I'm just gonna learn how to trade. And I would say actually learning how to trade has like been one of the best investments I think I've ever done, because um, yeah, I
And
think
what helped for you in that? Like you just one day just decided I'm going to take this stuff seriously and kind of learn the fundamentals, right?
a
Is that
hundred
kind of
percent.
what
I
happened?
think I think you have to really love the game and like be obsessed with it in some ways, and that's probably true for anything that you want to be really good at. Whether you want to be a
True.
good lawyer, or a doctor, a mechanic, whatever, like whatever you're really passionate about, like you have to be a little bit obsessed with it. But when I just was obsessed with trading, and I wanted to learn everything there was about trading. I wanted to listen to every single live stream podcast about trading from all the top people. I wanted to read all the books about it. I wanted to take all the courses on it. I have done so many of those, and I would say that what I've learned is you're not going to be able to copy anyone's strategy, you, bit for bit, and be successful. I think you have to learn what suits you from as many different people as possible, and then make your own strategy. What suits your personality? Are you risk averse? Do you want more risk? Do you want to take big cuts, but you only take a couple a year? Do you want to take a lot of small cuts, but you do it every day? Do you want tight stop losses? Do you want big stop losses? Do you want large take profits, small take profits? Do you want to take profit multiple times? Do you want to take profit all at once? Like, I think I could go on and on and on. Do you want to intraday scalp? Do you want a high time frame trend trade? Like,
But I
it's
guess you're right. There's a ton of angles and time
infinite,
frames for
infinite. There's
to,
infinite.
to consider.
So I think you have to ask yourself, like, I think you should just learn from good people at first. And I think, I'm biased, but I think you're in a good place. And there's a lot of people here who just want to teach, and there's no, we're not, we're not shilling
Fantastic.
bullshit. We're not like, you can take my word for it, but we're not scammers. We're not like, whatever. We're all doxxed, or most of us are doxxed, and like we don't care. Um,
I mean, I can tell that you guys are serious about it.
yeah, and
And
we're just
I guess, like
serious
I said, I've
traders.
been in crypto long enough to usually be able to weed out who's bullshitting and who's not. And you guys seem like I mean, it's been very helpful, and you're not. Yeah, it's been great. I have no complaints.
Well, good. Well, we'll do. I'm gonna try to do one of these educational sessions each week, and I'm also going to try to. I'm gonna try to do at least 2 live streams a week about like market updates and stuff, and we'll go
Oh
from
yeah.
there. And I'll DM you some educational materials too. And if you have any requests for like, hey, I really want to see a video on this or a lecture on this or something, like I've been really struggling with this. Like this actually was community requested. Someone asked me to make this video, and I was like, that's a great idea.
Oh, okay.
So
Well, I didn't realize.
I put this presentation together this morning, and I think it's a great one, and I think other people will enjoy it as well.
Yeah, oh, for sure. Yeah, it's very helpful. I do appreciate it.
Awesome. Well, Uncle Jay, until next time.
You too, man. You have a good
All
day.
right. Be well.